let's start off by looking at these yen pairs. Now, obviously, you can see it clearly on the 15-minute time frame. Boom, there's your move. That's that Sunday open. Okay, there's your Sunday open right there. And ultimately, what is this? You see this gap up here? By the way, look at this gorgeous gap close. Gap open, that's yen weakness. Gap close. I mean, that's just textbook stuff. We talked about playing gaps just a few weeks, not even a week, was it 2 weeks ago? We talked about gaps in particular. Here is the euro yen. Again, not as clean a gap close. In fact, it may not even arguably be a gap close. No, this one did not close, but the spirit of the close definitely fading into this open. That's what this is, by the way. That's what traders did in here. This was fading, if you hear this term, fading the gap. That's what this was. Fading the gap right up in here. Basically, just as soon as that gap open happens, you have traders that are just piling in, selling the euro yen, hoping for this gap close here. So that was the Aussie yen, the euro yen. Let's take a look at the loonie yen. Again, you can see the same rhythm here. Now the loonie yen did close. So your euro yen did not, your Aussie yen and your loonie yen have closed. Now, I want you to notice that fades are not just, kind of just sell and you just sit through it. I mean, this is a long time that you're sitting through this. Fade as a strategy is really a difficult one because it wasn't just boom, right? It was a little bit of movement higher, a little bit of movement lower, then you got some movement higher again. What's the market trend you're taking advantage of here? The question is fading a strategy? Is fading a strategy? I don't believe it is, and let me differentiate what I'm talking about. I don't look at it strictly, now we might get into a little bit of a semantics discussion, but is fading a strategy, strictly speaking? No, it's a tactic. Okay, in other words, you have an overall approach. Our strategies are dictated by market trends. So, more specifically, what market trend does fading capitalize on? What market trend? Is there one? Is there a market trend that fading capitalizes on? Before everyone starts adding fading into the core market approach, we have our Momo swings, wave reversal. On the outskirts of that, we have a distribution fade. But even the distribution fade is based upon what? First and foremost, the market trend. So is fading a strategy? No, it's a tactic, and it's a tactic that we would employ on a Sunday, or anytime we do have this type of movement. Sunday is best to capitalize on these. But it's just really a tactic that we're trying to take advantage of that is really a technical analysis and somewhat price-based approach to saying the market has basically possibly done what? What's the real question here? In this area, is there exhaustion? That's the question. Is there exhaustion in this area? Because that's what you're taking advantage of. So, yeah, in that regard, it's closest to a distribution fade. But what makes it markedly different from a distribution fade is there's no discussion here of a market trend. It's only market behavior, in this case, the trend, the gap up itself, which we would want to see. Where does this gap in terms of the close? And this is how we like to measure what we're dealing with. So the close here was 84.64. The open is 85.28. So I would do 85.28. I'd subtract my 84.64. And then I'm ultimately left with a 64 pip move. So I have a 64 pip gap. What I like to do then is talk about this gap in the context of, hang on over to AutoChartist, and then we could do it for any of these. This was what the loonie yen we were just looking at. So 64 pip gap in the context of what the loonie yen would typically do. And then what I end up with, save this search here. What I then end up with is looking at, I want to look at the daily price movement. Okay, I could even look at how outside the hourly gap that we are, but in terms of hourly gap, what we want to remember is that, you know, when we get into a Sunday situation with the fundamental reason, I mean, obviously, what's the driver here? I mean, it was pure fundamentals. So I'm not looking at this as any kind of price-based move. I mean, gaps are typically some sort of fundamental move, right? So I'm going to go ahead and take a look at the movement per hour, although that may not tell the whole story because we're way beyond the movement per hour here, even at the high end. We're 30 pips beyond the high end. So then I can look at the movement per day and see where that falls within some sort of exhaustive, potentially exhaustive move. 60-some pips puts me on the average for the movement per day on a Monday. Is that a lot of pips to open with? Yeah, absolutely. Does that give me a higher likelihood of potentially seeing a close? It doesn't increase the likelihood to the point where I feel confident shorting this because it's the daily average. But it is interesting that if I had a 30-some pip gap, I'd probably be a little bit more hesitant because I think, gosh, there is a lot more fuel in the tank. We could run up. Versus, say, a 60 pip gap where I see, oh, wow, that's pretty much the average for the day. So we did move a little bit beyond that, but I want you to see this isn't taking advantage of a market trend, nor is this an easy tactic to follow through on, because you're basically just saying to yourself, okay, the market hit an exhaustion point, I'm shorting it, and I'm waiting for a gap close, which eventually did come, but not before it just moved all over the place, right? What would be a more market trend-driven strategy, even for a gap? Is there a possibility for a wave reversal here? Absolutely. So let's say you're looking at this 50-minute chart and saying, you know, I realize this is just a tactic I'm employing. I have a move here that might be taking me from, taking me into a rollover scenario, right? So then I have the break of the 34 EMA wave. I'm waiting for the CCI to agree. Okay. And then I could look for a short, but even then it was a difficult trade. So I want you all to remember that while gaps look great on hindsight, they don't always look as good when you're sitting through them. Knowing where the market ultimately went makes you feel very confident about having employed a certain strategy, but it's not easy. So I don't consider gaps to be a core part of how we would look at the market.